Hi, welcome to the Market Alert for Tuesday the 11th of August 2015, and starting off in the 5-minute chart. As I said in yesterday morning's Market Alert that prices were likely to move higher, and that's precisely what they did, and in fact they moved up 100 points in the pre-market session, trading to the first 76% retracement that I put on the chart, which was 17,495. And then in the afternoon session, you can see there the market opening moving sharply higher, trading up to the psychological of 17,550. Then we had a triple X signal which was filled, and the momentum to the upside, and prices moving up to the 17,600. Didn't trade through this or drive through, so that's the clue that you should consider taking profits. We're also a few minutes before the quiet time in the market as well, so at this point it's advisable to take profits off the table. If the market had driven through with more professional buying like we see here, then I would have considered holding the position a bit longer. In the same here, you can see the price driving through, gives you a chance to see if it's going to settle on a psychological level before moving higher. But in this case, the market having moved 230 odd points, including the pre-market session, you can see they're running out of steam and then trading sideways, and then in the latter part of the session, their sort of last move to the upside there, you see prices moving higher and then running out of steam. And again, just to reinforce, I haven't traded the evening session for some time because normally the market's sideways, and you can see there it came back and sat on this level. However, on the overnight market, as you'll see from the daily chart, prices have moved lower, and this is because the Chinese have devalued the yuan. And again, that's a sign of what we've got coming. A global recession is on the way. The commodity prices are 13-year lows. This is indicative of no major growth. If there was growth, and genuine growth that is, not QE growth, then you would see a demand for commodities and in production and mining, etc. And all of these have fallen off a cliff. Copper prices are down 30%, oil prices down 70%, to name just a two, without the rest of the non-ferrous metals as well. So again, any up move in the stock market, I was hoping this would actually move back up towards the 18,000 level, and as the market left behind rising lows, we could actually tuck under this and stay in it for the longer term, because I do believe that we're going to see a big correction in this market before long. But the market down on the overnight purely and simply because the Chinese have devalued their currency, and don't be surprised if the Chinese start QE, printing more money than they've been printing to try and stimulate the Chinese economy. It isn't going to work, as it hasn't worked here. All the money did was find its way into the stock market. It didn't find its way into the economy, only into bankers' bonuses. So just before we move off this, you can see yesterday, this is what's known as a short squeeze, and we can tell it's a short squeeze because there's low volume. This is not genuine buying. This is just the market being forced up to take out stops of anybody that was actually short. It was engineered, and it started on Friday with this bar here. That's why I knew, because we've got the market coming off the lows, very high volume, the highest volume we've seen for a number of weeks. So the professionals were short, they were taking the money off the table. This brought the market up slightly, but then they were able to drive the market up and take out the stops along the way as well. No news today at 3 p.m. There's a bid out beforehand at 1:30, but the market will have factored this in by the time we get to 2:30 when the market opens. And finally, in the implied volatility, 1321 for Friday. Monday's volatility, a big drop, 1181, which you'd expect with that sort of squeeze they had yesterday. And again, this shown in the chart here. Right, that's it for me for this morning. I will speak to you in tomorrow's edition of the Market Alert. As ever, thank you for your support and also for watching. See you in the next one.